So, welcome again. According to the gov.uk website, making tax digital is a key part of the UK government's plans to make it easier for individuals and businesses to calculate their tax obligations. HMRC's ambition is to become one of the most digitally advanced tax administrations in the world, modernising the tax system to make it more effective, more efficient and easier for customers to comply. There is widespread agreement that making tax digital for business is the right approach for the future. However, a number of concerns about the pace and scale of change have been raised. Businesses will now not be mandated to use the Making Tax Digital for Business system until April 2019, and then only to meet their VAT obligations. Joining us today to help us navigate this new mandate and its requirements are Caitlin Smethurst, Regulatory Counsel at Sovos. As a Regulatory Counsel at Sovos, Caitlin specialises in both international taxation, with a focus on value-added tax in the European Union, as well as specialisation in sales and use taxes that apply in the United States. Caitlin received her BA from Roger Williams University and her JD from Suffolk University, and is licensed to practice law in New Hampshire and Massachusetts.
Thank you, Julian. Hello, everyone. It's my pleasure to be here.
Also joining us this afternoon is Casper Winkleman, Solution Principal at Sovos. As Solution Principal, Casper is responsible for the strategy of the Sovos V80 Reporting Global Indirect Tax Software application. He also works closely with Sovos clients and partners to facilitate sales, software implementations, and international compliance process transformations. Casper is a tax lawyer with over 20 years of international VAT experience.
Thanks for this introduction, Julian. Happy to be here as well.
Thank you. So Caitlin and Casper this afternoon are going to answer some of the most frequently asked questions about the mandate, and you will have the opportunity to pose your own questions via the interface on the right-hand side of your screen. We will aim to answer as many as time allows today, and any questions we don't have time to answer will be answered personally after this session. So perhaps we can start off by just, you could give us an overview of exactly what are the VAT declarations and communications in the UK?
I can answer that, Julian. Thank you again for the introduction. Discussing the current declarations and communications is a great starting point before we dive into this concept of making tax digital, because it is important to have a brief overview of what's currently required for VAT registered businesses in the UK. So to start, as you may be aware, there is the V80 Return, which is an accounting of all of your VAT records and is required to be submitted to HMRC. Now, the VAT return is due 1 calendar month and 7 days after the end of any accounting period, which could either be monthly, quarterly, or in a few instances annually. The quarterly return is the most common filing period, and to have an annual filing period, you would need special permission from HMRC. In addition, this return is required to be submitted electronically. By almost all VAT registered businesses, you'll be required to submit an XML data to HMRC or VAT return. The only reason that you would not submit this electronically would be that your business is subject to insolvency, or maybe you object to using a computer based on religious grounds, or because of a disability or location that does not allow you to access the internet. And finally, with your VAT record, you do have record keeping requirements. And under those requirements, you are required to maintain for a period of up to 6 years, or a period of up to 10 years if you're only registered for the mini one-stop shop scheme, your VAT records, any VAT invoices, including supplies and purchases, as well as any VAT account information. So starting first with an overview of just what are the VAT records you're required to keep. As I stated, and I'll cover this in more detail on the next slide, you're required to maintain a VAT invoice. And this is, again, even if you have a sale that's canceled or produced in error, you would still maintain that invoice for that period of 6 or 10 years, respectively. And for these invoices, you may be able to maintain them physically or electronically, depending on what is easiest for your business. And again, this is the current requirements. This will be changing, which we'll discuss as we move further along in the presentation. So diving further into the invoice itself, as you can see in in front of you, there is quite a bit of information that is required to be maintained as a part of your VAT invoice. And I want to stress at this point that although changes are being made to the process of how you submit your VAT return and how you maintain this information, the type of information and the data that's required will still be the same. So you can see things such as having a unique invoice number that's sequential from the last invoice that you issued, or the time of the supply, the amount of VAT, the amount excluding any VAT, price per item. These are all details that are required in order to have what HMRC would consider a valid invoice. And finally, you would need to have any accounting schemes that you're using as a part of that invoice listed on the document itself. Finally, as an additional record, businesses are required to keep VAT accounting information, and this requires certain data points, which at a minimum, you can see on the slide, you would need to have your total VAT sales, your total VAT purchases, any VAT that is owed to HMRC, all VAT that can be reclaimed because of an input tax credit, any VAT, if applicable, that you would claim under a flat rate scheme, as well as the percentage and turnover that would apply to on your VAT accountings, and any VAT on EU acquisitions or dispatches. Now, all of this record keeping that is required must be maintained by the business so that they can then use this information to populate the VAT return. In addition to the VAT return, there are two other required declarations. You have your EC sales listing and your Introstat return. Starting first with the EC sales listing, the predominant filing period for this document is monthly. However, similar to the VAT return, you can request quarterly or annual filings. And as you can see on the slide, if you submit your EC sales listing online, you do have until the 21st day of the filing period, which is a way for HMRC to currently incentivize businesses to start using electronic platforms. The records maintained for your VAT account information will be the same records that you would use to populate your EC sales listing, and the same time record keeping requirements apply to your EC sales listing. Moving along to your Introstat return, this document is required to be filed monthly, and that is the only filing frequency that you can select for this document. And it is due on the 21st day of the month every month. This is an electronic filing, and there are some options currently through HMRC to submit this. This is either done through an on-screen submission, a CSV file that you then send to HMRC, or an EDIFACT email attachment, which, to clarify, an EDIFACT is the International Electronic Data Exchange Standard that the UN developed. And essentially, the standard provides a set of rules for structuring your data and exchange protocols and standard messaging. So in order to send the document via email, you must meet those requirements. And the records maintained to complete your Introstat must be maintained again for that 6-year period, similar to, as I stated previously, for your VAT return and your EC sales listing. And as a final note, you'll see there that fourth column on the screen. The UK is currently discussing the implementation of a split payment mechanism for e-commerce transaction. The idea and goal from HMRC is that when you have an online transaction, there is an area for a potential of VAT gap, because international online retailers can avoid being charged VAT, or they're not within the jurisdiction of the UK. So in order to fight against that gap, HMRC would require in real time that you pay the VAT on those transactions up front. This proposal is currently in the consultation phase, and that will be until the end of this month. On the 29th, that phase will end. So businesses are still encouraged to reach out to HMRC, and if your business is utilizing online retailers or has a large component that is online e-commerce transactions, HMRC would encourage you to reach out, and the link on your screen, which will be provided at the end of the presentation, will take you to the main landing page for that potential communication that may be required. So that's a general overview of all of the information required for declarations and current communications in the UK.
Thank you ever so much, Caitlin. And so Perhaps we can have a look now, what exactly is Making Tax Digital, or MTD as it's become known?
Thank you, Julian. I can follow up on this one as well. I do get asked this question a lot, and the simplest answer that I can come up with is that Making Tax Digital, or MTD, is HMRC's way of digitizing how businesses account for VAT and really globalizing how HMRC handles tax collection for VAT. So to understand this statement first, I think it's important to look at a timeline of how it's come to be. So of course, we have the VAT Act enactment, which was in 1994, which eventually brought us all the way forward to 2015 with the budget announcing this new digital transformation plan for the tax administration. So after this budget speech in December of 2015, you have what has become known as the Making Tax Digital Roadmap. And in that roadmap, it kind of laid out the initial groundwork and timeline of how HMRC envisioned the rollout of this program. So you have a bit of a time gap, as you can see, between 2015 and 2017, so November of last year, when the legal authority came down to allow HMRC to digitize their VAT return and VAT tax collection. So after this act became law, in February of this year, we had the publishing of the VAT regulations, which I will cover in more detail on the next slide. And that document outlined most of the basic requirements that businesses will see required for them in April of 2019. And where we are now is currently in the middle of the pilot program, which began in April of this year. And essentially the pilot program was to allow businesses to pre-test the new JSON API, or the new interface that HMRC will be requiring businesses to use come April of 2019. And businesses are still encouraged to contact HMRC about the pilot program and are encouraged to test out this new functionality ahead of the mandatory period in April 2019. And as 2019 approaches, we also have to ask ourselves, looking at this timeline, what will happen next? What does the future look like? What does 2020 look like? HMRC has announced that they intend to eventually roll out this digitization and digital platform to all tax regimes in the UK to streamline the process for all taxes. However, with that said, it seems from reports from HMRC that this would be unlikely until after 2020, especially given the impending uncertainty of how Brexit will unfold. So this brings us to today. We are right, as I said, in the middle of the pilot program period, and the foundations of Making Tax Digital have really started to become evident from HMRC. So we have kind of an overview, as you can see, of who needs to comply, and essentially it's all VAT registered businesses. So if you meet that registration threshold of £85,000, you will be required to comply with this initiative come April of 2019. So as I stated, we are in the pilot program, which started in April, and that will run until the effective date of the initiative, which will be April 1st of 2019. What this digitization is, they're not changing the VAT return, they're not changing the data that will be reported, but HMRC is changing how you maintain that data and when you maintain that data. So you will be required to submit your digital return quarterly. And the information, the best way to break it down, I've summarized in 4 categories here. You're going to have your designatory data, you're going to have data for each supply that you receive, and your VAT account information. And all of this information will be maintained in a single financial account that you will have on this new JSON API interface. So starting with our designatory data, you'll be required to have, as you can see, your business name, the address or principal place of business for your business, your VAT registration number, and records of any VAT accounting schemes will all be inside of this digital platform. Similarly, you will have for your supplies that you sell as well as supplies that you purchase, you will need to maintain the time of the supply, the value of the supply, and for your purchases, that would include any VAT paid that you're not going to claim as an input tax credit, the VAT rate you charge on any sales, and for purchases, the VAT amount that you will be claiming as an input tax credit. So similar to what we were discussing earlier, you will still be required to maintain all of this information, but instead of having it in separate accounts or documents, it will all be maintained under this new digital platform in your single financial account. Finally, you'll see that the VAT account data is there and it is required to be maintained digitally. And that would have your output and input tax information, any output or input tax owed or allowed respectively on acquisitions from other EU member states, tax that is required to be paid under reverse charge mechanism, tax paid due to a correction or error on a previous return, or any other adjustments. As you can see, that essentially if you're making any type of adjustment to your VAT account information, you would need to maintain that digitally. All of this information maintained in this single account will then populate your VAT return, which will then be submitted through the portal to HMRC. And through this new interface, businesses will be required to have the ability to communicate with HMRC, which will include sending and receiving messages. So you must be able to digitally send and receive communications from HMRC. And this will be the only way that HMRC will accept communications related to your VAT return. So what happens if you don't comply with this? What are the consequences for non-compliance? This is one area that is still being currently developed under the regulations. It does state that HMRC has the authority to impose penalties, and HMRC has stated that these penalties will likely look a lot like what penalties are currently under failure to submit your return, failure to submit your return electronically, and these include penalties such as a surcharge, which could be set for a certain amount of period, such as a 12-month period, or you may have to pay an extra surcharge one time on top of the VAT amount owed to HMRC. And then your surcharge may be based on how many periods you've been out of compliance. And again, this is similar to what you might see currently for penalties. Currently, you can pay a £400 penalty if you submit a paper VAT return. HMRC has stated that these penalties will be similar. So this is the general overview of what we've seen come from HMRC, and as the pilot program continues to develop and move forward, the finalized regulations will get published from HMRC.
Thank you, Caitlin. And why exactly is the UK moving towards digitisation, do you think?
Yes, I can answer that question, Julian. I think the far and biggest reason for HMRC is basically the VAT gap, or the tax gap actually. And if we look at the tax gap figures that were published in 2014-15, we've seen that the HMRC is basically losing £8 billion per year, and basically that tax collection gap is created by all kind of avoidable taxpayers' mistakes. Out of that 8 billion, 3.5 billion is actually created from mistakes made in VAT returns alone. So the thought of HMRC here is that by modernizing the tax system with digital technology, it will become easier for taxpayers to get it right, make less mistakes, and thus improve the tax collection as well. Okay, to the next slide, please. So if we just look at the total picture in the EU, you will see that the UK, at least from an absolute value point of view, the one in red here in this picture, is the second biggest gap in the European Union. And if you then look at percentage-wise, so in relative terms, it is the 13th country in the EU with the size of the VAT gap. And what this picture basically tells us is that most countries with a relative or absolutely high VAT gap are very much focused on how, of course, they can reduce this tax collection gap. And what we've seen now over the last couple of years, and also coming from a trend from the Latin America world as well, is that until today, the best solution for decreasing your tax gap is to use technology basically for your tax processing and tax collection as well. Okay, and if we can go to the next slide. So other reasons that HMRC has mentioned as well is, besides the VAT or tax gap, is that they want to make better use of information they receive from taxpayers and third parties, because this and have a better interaction with customers as well in a digital way, because that ultimately reduces their burden and time delays that is associated with paper forms and postal exchange. And it also reduces the phone interactions that they have today and basically reduces their administrative cost in executing the tax collection process. The other reason is that by requiring taxpayers to update their accounts real time, basically supply data real time, so it becomes real-timely available, then also the tax position of the taxpayers become real-time visible to them. And the thought here is that by making sure that you have a clear visibility currently already, instead of having to wait till the end of the year, what was the old situation, is that this will prevent errors from building up. And so people can already see potential errors, can make their changes already during the year, and at the end of the year they will have a more accurate picture as well. And all this information will be provided to a single financial account, basically a single picture for each taxpayer of about the liabilities and entitlements, more or less structured like you are familiar with online banking systems.
Thank you, Casper. And perhaps we can just talk a little bit now about how exactly MTD is planned and will work.
Julian, I am happy to take that question. So as we've discussed up to this point, we've covered what MTD will be, why HMRC has pushed forward this MTD initiative, but now the question is how. How will MTD work in practice once we hit that April 1st, 2019 period? The answer is illustrated in front of you. It is somewhat simple that nothing about the VAT return itself is changing. However, on the more complicated side, the interface and the way that you communicate your return to HMRC will be completely transformed. And I've used this word JSON API. Essentially, that's the technical name of the interface that HMRC is integrating. And the way that this will work is that your business will log into your single financial account through the new API from HMRC. You will have all of the data that I outlined previously for your V80 records, and you'll take that information and it will populate a digital copy, of your V80 return. Now, this will then be sent directly to HMRC, kind of in that real-time tax component. And again, you'd be able to see in real time through the interface if there was an error with your submission. HMRC recommends that businesses work with certified providers, commercial software providers, if you so choose, to work to integrate your business into this new platform. Currently, there is a link here on your screen to a list of current commercial software suppliers that have been certified as successful through sending their VAT return to HMRC. This information is for the current VAT system, pre-MTD, I guess we could say, but there is likely going to be a list that is published similar to that. Sovos is on the current list of certified commercial software suppliers, and it'll be critical for businesses to decide how they will meet the technical requirements, whether that is integrating through a commercial software supplier such as Sovos, or by integrating their accounting system directly to the new JSON API. However, it is critical at this point that businesses are assessing how they will meet these new digital standards ahead of the requirements in 2019.
Thank you, Caitlin. So as we all know, we're moving ever and ever closer to Brexit. Can you please just describe what the relationship might look like between Brexit and MTD?
Yes, I can do that, Julian. So clearly, Brexit will have an impact, and that is because the tax collectors and the customs officials are basically too busy in getting ready for the Brexit as well. So that will have an impact in the sense that, in particular, the MTD for individuals will be more or less delayed. It is planned for 2020. But most likely it will be afterwards, but it's not confirmed officially as yet. For businesses, the planning is still as is published, and the reason for that is that HMRC has already given companies more time to adjust to making tax digital by also allowing them to start first with just VAT obligations. And the reason is that the VAT obligation by itself, companies are already familiar with the online submission of returns because that was already since 2010. And most companies, well, 98%, already file their returns electronically as well, and often on a quarterly basis as well. So for companies meeting their VAT requirements and obligations, the change is not such a big change compared to today. All the other taxes that will follow is maybe a bigger change. So that's why the path is still the same, because the companies already received a lot of time to get used to it.
Thank you, Casper. And finally this afternoon, from our frequently asked questions about MTD, could you perhaps describe how businesses will be impacted by the mandate?
Yes, I can take that one as well. So hearing us describe what is required, etc., then I think it's clear that the use of technology is a given. Technology is used by governments basically to improve the tax collection, and taxpayers are more or less required also to use software that is compatible with the HMRC portal as well. So in order to meet these requirements, technology is the basic way to do that. The other element that companies should be aware of, in my view, is that of data accuracy, because there is a focus on having data available in real time as much as possible, and tax authorities use data analytics also to improve compliance and help focus their resources on taxpayers that need greater attention. Is that the data then you supply must be accurate, because it is way more visible to HMRC in case it isn't. And that's more linked also to the last part, the third impact in my view, is that of a financial risk, is because all the data is transparent and visible, and technology is also used to validate data, then it is way easier for tax authorities to audit more data, but also to find errors easier. And this, of course, creates a higher risk for companies, because that will potentially mean assessments and more penalties as well. So for companies, it is very important, in particular, well, not only the use of technology, but also to make sure that the data that is submitted to tax authorities is as accurate as possible, and if possible, in real time even as well.
Thank you, Casper, and thank you, Caitlin, for your contributions this afternoon. Well, ladies and gentlemen who are listening to our Q&A session this afternoon, as you'll have seen by the time, we've actually used up our entire 30 minutes. So as I said at the beginning, any questions that you have posed or you would like to pose via the interface on the right-hand side of your screen, one of the Sovos team will come back to you very quickly with some answers to those questions. So finally, before we conclude this afternoon, I just wanted to provide you with a little bit more information about the support and help Sovos can provide. We have a wealth of resources which can be accessed in the resources section of our website, sovos.com, and you can also subscribe via our website to our newsletter and regulatory feed, and we regularly publish the latest information about regulatory changes, opinion and guidance on our blog. Again, this can be accessed via our website. For the social users amongst you, you can also follow us on LinkedIn and Twitter. And if you would like to contact us directly with any specific questions, even after this webinar has finished, then you can either email us or contact your local office. Finally, we'd like to thank you ever so much for attending this question and answer session, and do hope you have found the content both stimulating and informative. Please do remember, if you do have any other questions, just contact us and we'll do our best to help. So thank you again for listening, and thank you to Caitlin and Casper for your contributions. Good afternoon.